Well, gentlemen, we had an interesting discussion, I guess, about a week ago, and we were sharing some experiences as to what's happening in our respective markets. And we decided we'd start, before we go into any specific details of what's happening in the markets, I asked you all to kind of think about the headline issues, sort of the big messages, and I guess what is actually happening on the ground, and to identify maybe the 2 or 3 big sort of current sentiment issues that are happening in your respective markets. So, and then Simon, I've asked you to sort of give an overview, an outsider's perspective of how after we've heard those 3 comments. So maybe we start with Italy and just hear what's the current sentiment, what's going on?
Sorry. Well, I think in Italy, we are facing right now quite a mixed situation, in a sense that after a couple of years in which Italy was actually out of the radar screen of international investors, now Italy is back. There's a kind of interest for Italian market, both on the equity side and as well in the debt side. So I can't say that there has been really some concrete sign of recovery. I really do think that the situation is still critical from a certain point of view, but the spirit that there is coming into the market is totally different. And we know very well that the markets are driven by sort of animal spirits. And so the fact that today you have the vision on the market, that puts the market in a different perspective. But if we have to identify what can be the real event that will give the direction of the market for the future, in my opinion, it's the asset quality review that the banks are starting to facing today. And the way this asset quality review and the results that this asset quality review will lead, in my opinion, that will be the event that will give the pace of the market, and if this market will have a recovery or won't have a recovery.
Pere, in Spain?
I think that different things going on at the same moment. First of all, are we on a recovery? Not yet. Rents are not improving, employment is not improving. What's already in place is that there's been many changes in the economy that allow to think that the recovery will come soon. The current account deficit, the exports, the cost of the employees, the productivity, all of this has improved. The leverage of the economy has improved dramatically. And it's mainly because of that despite the fact that rents are not improving yet, occupancy is not improving yet, the financial side of the equation, meaning the investment side, has already stepped in, and there's a huge evidence of interest in the markets, and that's starting to mean yields starting to compress in certain assets. So it's a very hot moment at present. It's a moment where 2014 can be the year where things are going to change in Spain.
And Gilberto, in Portugal?
Well, basically the same thing in Portugal. We have a much better macroeconomic situation. The government we have in the past 3 years with the bailout has put in place a lot of reforms in every sector, from labor market to reduction of the state, of the size of the state, the intervention of the state, privatizations. A month ago, the post office was privatized. And there's a sincere policy to reduce the weight of the dead weight, let's say, and that's been working. And we see movement clearly from a 2010 to 2012 dead market. 2013 is a big sunshine in the investment market. Office rents and yields are the same. But they're not going down. So basically everything is not going down, and whatever is moving is going in the right direction.
So some basic stabilization across the sort of the economy, across the real estate market in terms of fundamentals. But I guess one of the major problems it has is the debt overhang, is the amount of debt, real estate debt still in the banks, and effectively zombie banks that may be still there. Simon, actually one of the comments I heard here back many years ago, back in 2009, was come clean in 13 for banks to start that process of and I guess for developers and investors to resolve those debt issues. Do you see across Southern Europe the sort of the same approach like has been adopted in Ireland in terms of starting to delever the banks, to take aggressive strategies, and is that leading to opportunities? Is it leading to sort of pricing adjusting to the market level?
Well, maybe I should just caveat all my comments by saying that my specialist subject on this panel is Spain. So even though it's Southern Europe, Spain is a market I probably know best. Unfortunately, with regards to that specific question, of course, Spain has done something massive, which is that it's allowed its over-leveraged banks with massive portfolios of non-performing debt to basically hand those over to the Sareb. So I do actually think that that's been one major catalyst to the recent arrival of so many investors in Spain, which is suddenly you have a counterparty, a bank, that has to sell and is actively selling. I was with a friend last week from an investment bank, and on his proprietary trading desk, they have one person dedicated full-time to talking to the Sareb about buying assets. So as far as they're concerned, this is a massive mine of potential opportunities. So I think that it took 5 years to come, but obviously Ireland did it a lot quicker with NAMA, but now that it's come, I think Spain really does have this enormous catalyst for deal flow for a lot of the people in this room. However, that's not to say that the banking sector is now behaving in a normal way vis-a-vis the economy, because I think I was told on this panel that my role should be to try and be the bad guy, the one that's maybe not sitting in one of the countries we're talking about, but maybe with more perspective and taking maybe the slightly more negative view. So one of the things I did was that I thought, well, if I'm going to have to give some comments on what's really happening on the ground, I should call a couple of friends that work in industry in Spain. And I said, hey, I've got to be the bad guy on this panel. Is there really a recovery in Spain? Well, I couldn't get them off the phone. I mean, they were, moaning about how, everything. We all know all the statistics in Spain about how everything is more or less functioning at 60, 70% of peak levels, whether it's advertising spend, whether it's car purchases, whether it's the amount that a family spends on clothes in a given period of time. Everything is functioning at this extremely low level. But when I got onto the banks and I said, okay, now we have a supposedly healthy banking sector, fantastic profits are all announced by Spanish banks literally only last week. No, they are still deleveraging very aggressively. They are cutting credit lines to corporates, and they're keeping credit very, very tight. And the one data point that you can look at is the issuance of high yield. If you're a corporate and you need cash in Spain, you go to a hedge fund that's going to issue you high yield bonds. So no, it's the banks have. I think the banks have had a very, very easy ride. They've been able to extend and pretend for a period of time. They've been given this lifeline, which is the Sareb, and now they are healthy, but they are not doing what they need to do to stimulate the economy.
And have Sareb solved all of the bank's problems, or are they left with part of their balance sheet unresolved?
Well, in fact, Sareb first has the non-performing assets or loans of certain banks. And then, on top of that, other banks have their own bad bank. No? And Sareb certainly is being a catalyst, but I think that Sareb has certain weaknesses. No? It has 50 billion of assets, and a big chunk of this is not what people think that they would like to invest in. No? I mean, it's mainly land where demand is not there to honor this supply for many years now. I think that now we are seeing the good part of Sareb. I mean, they're putting on the market what's good. After a few years, I doubt that Sareb will remain as a catalyst. But in the short term, it's helping the sector to perform correctly.
And what about Italy in terms of the banks and their balance sheets and the debt? And are they still extending, pretending, or do they have a fundamental problem that needs resolution?
As I said, this is the hot topic in the Italian banking system. And the Italian banks are starting the process of cleaning up their balance sheet. The they're following different strategies. To the two leading Italian banks, one, Intesa, is supposed to announce in the month of March the creation of a bad bank, in which they will deposit part of their bad loans. And they would like, I suppose, to manage directly this bad loan portfolio, while the second bank, leading bank, UniCredito, is selling bits and pieces to professional these bad loans portfolios. Same process is being done by regional banks, which are, therefore, the process of cleaning the portfolio absolutely is starting, because the asset quality review program will be due this summer. Will this lead to a massive sell-off of loans in the market? To be quite honest, on this I'm more doubtful. I think there's going to be either a strategy in which banks will try to manage, with the help of some third parties, these bad loans portfolios, or they will put in the market, certain parts of this asset. I do not expect really a massive flow of bad loans within the market, but clearly the process has started. And the debate that we do have in Italy today is, will Italy follow the Sareb example, will follow the Irish example? And there is a very strong idea that banks will do it by themselves rather than creating a common vehicle that will manage the bad loans portfolio, even if there's a definitive answer on this theme has not been given yet.
Okay. So there's the emergence of solutions to I guess, the over-levered property. The channels for selling these is commencing. Just talk about the types of deals that are happening in the marketplace, the type of opportunities one would see for an outside investor looking at the market. What type of transactions are taking place that are of interest, say in Portugal, for example, at this point in time?
Well, just to get back to the previous issue, the Portuguese solution is more or less the same as Giancarlo has explained. We don't have a Sareb or an AMA. Banks are left to digest the problems by themselves, although it started several years ago. At the beginning of the crisis, and the banks have had a loss in the past 3 or 4 years, yearly loss, with some government support, some loans, fairly expensive, but that's bridged them through. The important aspect here is that the overhang is much smaller than the other economies, because the peak was achieved in 2000. If there was a bubble, it started deflating in 2000. So in 2000 we had, from the residential sector, for example, over 100,000 new units. Last year was below 10,000. And credit, again, the peak was achieved in 2007 with around 20 billion euros in mortgages. Last year was below 2 billion. So the overhang is much smaller, and exiting the crisis will be, I think, faster. Deals in the office market have started. Either high net worth individuals, family offices, and some foreign investors. There's some significant deals by German investors, by Brazilian investors, and one of the bigger markets is Angolan investors too. On the commercial side, I think there's yet to be seen some movement. And in the tourism sector, there you see things happening.
And are these deals being prompted by banks suggesting to borrowers they go refinance, or what's leading to the deals taking place in the market?
Yes, to a good extent, the owners are either not owners anymore, or being forced to find solutions, and yeah, that's more or less the movement. The prices have come down, obviously, so that's become attractive.
Okay. In terms of Spain, what sort of deals are you seeing happening? I know Sareb has actively started to sell at this point in time.
A little bit of everything, but I would say that a very important thing to keep in mind talking about Spain is the difference across sectors. When we're talking about overhang, relationship between supply and demand, for example, residential, for me, it's quite difficult to support that supply and demand look in pretty good shape. So in the residential, we only see certain deals about certain lots of residential units that are already leased, being bought by international investors. You see more activity in commercial, where supply and demand can offer a more clear picture, and where fundamentals are also more compelling. For example, in the prime office, today in Madrid, the rental values are the same that 30 years ago in nominal values. That means that in real values, we are well below the 30-year low peak, and yields are at the high end. So capital values are 60% below what they were 5 years ago. That's the kind of things that is attracting people, but mainly to commercial and a little bit to retail so far.
And in Italy, are you seeing, given that the banks are taking a sort of a slow approach, is that leading to opportunities in the market, or is it?
What has been the characteristic of the market in 2013 is that has been a market that has been led by institutional investors, insurance companies, pension funds, international investors. And what was one of the strengths of the Italian market, that was the domestic investors. This, I would say that in 2012 and as well in 2013, this kind of confidence hasn't shown up yet. And therefore, it's a market that is driven much more by institutional rather than by the private sector. That has been traditionally the strong force of the Italian market.
Simon, as an outside person looking for opportunities to invest in Southern Europe, where do you see the activity? What are the routes to the market for you, routes to deals? Right. Is it by talking to the banks? Is it by talking to the former borrowers? How do you identify opportunities?
No, it's definitely all about the banks. But I like what Pere said. I think it's a very, very, coming back to Spain for a second, you're looking at one of the few liquid investment markets in Europe that is way off peak levels. That's certainly not the case for London or Paris or Frankfurt. So I can see why investors now would say, I'm prepared to make a macro bet around Spain because it is a market that's demonstrated itself to be liquid over the years. It is a dynamic country with a reasonably dynamic or stable political situation at the moment that's making the right steps in terms of reforms. So I can understand that, and finally the banks have got, whether it's via the Sareb or through their internal provisioning or through just the fact that the regulation on them is tightening significantly and they're having to provision these situations, finally there's an opportunity to actually talk to people in the banks and do deals. So I see all of that. I think my big issue in looking for deals in Spain is how do you make money in a 3 or 4 year time horizon if you're an opportunistic investor? Obviously, you can always make money buying well, buying cheap, buying 15% less than paying 15% less than you should have paid. But just the fact that we're having this meeting in this room and not in some side room like in previous years talking about Spain, this is demonstration that there's an enormous interest suddenly in Spain. And so if I'm trying to buy that opportunistic asset, I'm probably not going to be on my own, and there's going to be 4 or 5 people bidding it up. So let's assume for a second that it's going to be quite hard to buy things, very, very cheaply. So the issue I'm struggling with is there's no doubt that Spain will enjoy a recovery, and the property markets will enjoy a recovery over a period of time. My issue is opportunistic money the right money to deploy in Spain today? Surely the best money to deploy is long-term investment capital, because then it's much easier to make that macro bet, because then if it takes 5 years or 10 years, I mean, obviously you care, but you've got the capital structure and you've got the patience to be able to wait. A lot of an analogy maybe for Spain, and this may be applied to other southern European economies, it's a little bit like somebody who has just come out of hospital after a really quite a severe illness. And so this person emerges from hospital into the daylight for the first time in a number of years, and they're alive, they're fundamentally well, but they're extremely weak and extremely anemic and extremely susceptible to an external shock. So this is not somebody that should be straight away put into a rugby match or something. So, and how long will it take for this person to recover and become strong? Well, we know that if this person's out of hospital, it's because they've got the fundamental ingredients to be strong again. But it could take some time. And I think that's the big question. A lot of the transactions we're seeing in Spain at the moment being led by opportunistic funds I believe that a lot of this money needs to double itself in a 3 or 4 year period. I'm just not quite sure that the economy is going to be recovering fast enough to deliver those returns. I'd feel much more comfy with 10-year money and that sort of return expectation of doubling it.
That's an interesting point. I think in Ireland we've seen since the mid last year the emergence of two domestic REITs who have actively gone into the market and changed pricing because it's long-term money. And the opportunistic type capital that was looking for higher yielding returns, the market's changed. The pricing has readjusted to make it more expensive. The REITs are there. There's still a lot of other money, and in fact the REITs are mostly funded by US investors, so taking a bet on the macro recovery. In terms of Italy and Spain, do you see long-term capital looking for these assets, or is it all opportunistic?
Well, I mean, if I have to talk about my experience, I mean, we are present in Spain. To be quite honest, we have been looking, we were not negative or so negative on Spain as it was, as I say, the general sentiment was in the past few years. And very honestly, we have been chasing for top quality assets in the past few years that were practically impossible to be found. And you know, the funny thing is that we were buyers, and at the end we finished to be sellers because we received such extraordinary prices for certain assets for others. There was absolutely no risk reward between being in Spain or in other city centers. And I tend to agree totally with Simon in saying that, I mean, if the way we're trying to look at Spain is not with a short-term view, but with a long-term view, and really betting in the recovery for the next 3-4 years. It seems rather complicated. Either you find a specific deal, but this has nothing to do with macro, but has to be with a specific situation. But finding in on the long term, we're pretty much convinced we have a definitely positive view on it.
I agree. I think that if you go to the opportunistic end, it's very difficult to find deals with a good return in a short-term period. At the other end, if you look at the really core, there's no supply. If I want to sell a building tomorrow morning, I can do it at excellent yields because many buyers, no sellers. I think that the normalization of the market is in the value-added segment where you have to work a little bit to get returns. You can get decent returns in a decent period of time. That's where we are, and certainly more for the longer term than for the short term. Are people interested in this? Yes, well, for example, ourselves, our company, we've announced that we're going into a deal. We are raising $1 billion of equity in the next couple of months, out of which $500 million is already there from people who are willing to commit for the longer term. So that's already happening, no? And a word about the debt. I think that Simon pointed very correctly that the main weakness of the Spanish system remains the financial system. I mean, the deleverage is not over. So the big question is, how do we deal with this? And I think that a very interesting movement that is happening now that you could not see 12 months ago is that different kind of lenders from other parties, from other countries, coming to Spain. I can tell that today pension funds, insurance companies, sovereign funds are actively looking at Spain as a market where to lend. And this is going to be quite a relief for this deleveraging process that doesn't allow the financial sector in Spain to support the recovery of the market.
Briefly, debt in Italy, is it something that's readily available?
Not as much, not yet. Okay. Banks are still in their, let's say, process, and I wouldn't say there is a bonanza of debt today. New actors, as insurance companies, are looking at the market, and I tend to think this is not just for in the short term, but even if there are some, let's say, structural limits and constraints, but I think the panorama of people that will lend to real estate will enlarge, will not just be banks, but that will take some time.